Last week, of course, we heard from the High Court. That was moved markets, essentially moved the pound quite considerably and stocks. What's the investor perspective on Article 50? Investors like certainty, so they want to know that there's a time scale that's being stuck to. Do they want to see the UK airing its dirty laundry in public? Do they want to see a full debate about all of this running up to the triggering of Article 50, or do investors not actually mind that much?
Well, I think it matters quite a bit. So on one hand, of course, the reaction from Sterling at least did suggest that markets were happy about this because greater likelihood of a soft Brexit versus hard. So that's from the market point of view the positive thing. I think the negative is potentially just how long now is it going to take before we work through that process, get a vote, so on and so forth. And the key issue has always been, are businesses at some point going to decide it's just too much uncertainty, I don't know when I'm going to have a definitive answer, and so I'm going to start pulling investment from the UK and making it elsewhere. So I think it was a bit balanced, some positive from markets point of view, but also some negative, and we'll have to see how they come out.
So where are we in that process? I mean, what is your take on the ongoing uncertainty? You just said it's a trade-off, right? And there's only so much, and so far foreign investors are willing to stick around for the UK to fix its house, right?
Yeah, I think if foreign investors and that are currently invested in the UK or thinking about it, if they see it moving past first quarter of next year, which I think was a timeline that most people had come to accept, if now it's being extended, to some point in the future beyond that, I think it's going to have a more significant impact on the FDI in the UK over the next several years.
What about the pound then? I've got here WCRS, the function on the Bloomberg shows year to date where we've been on the pound down 15.6%, of course, against the dollar, the worst performer of the G10 currencies. No surprise there, despite the little bounce that we saw last week. How much further, how much more positioned are we for further weakness on the UK story around sterling, do you think?
Well, you think the weakest that we got so far was kind of, again, going with the assumption we saw more likelihood of a harder Brexit, so we've had a bit of a turnaround there. So, every day, every kind of communication for the government moves that sentiment one way to the other. So I think if you get a sense that somehow the government is going to be able to stick to the original timeline and the original framework that's set out, I think you definitely could see sterling weaken. On the other hand, if it's also an extended debate, that's also not necessarily good for the currency. So I think from here, probably you're more concerned about weakness than a big rally.
Almost comes a point where you start to wonder whether the pound is fixated on the eventual outcome or the timing, and they might be playing against each other.
Exactly.
So how would you trade British assets at the moment?
Well, you've got to think about the benefit that you've had so far for equities in terms of the depreciation of the currency. How much more you're going to get from that next year. So I think that's a problem from the equity point of view. You've had the benefit from weakness. On the gilt side, you're not going to see, of course, much action from the Bank of England. So it's a little bit more equivocal in terms of UK assets at this point. Probably more risk with interest rates, and also not quite as much upside probably for equities unless you see another big leg down in sterling.
Are you factoring in the inflation story then increasingly, Daniel? I guess so. I mean, the Sunday Times reporting bird's eye, just the latest of a number of companies talking about putting up prices. In the UK, I spoke to Justin King, the ex-CEO of Sainsbury's, not that long ago, and he was saying, well, of course, they're going to pass these increased costs on to consumers. It's just a question of timing and when that happens.
Well, I think that's been the big story about Brexit since the vote itself. We got, so to speak, the benefits of it in terms of the weaker currency, boost to exports, boost to sterling earnings for corporates domestically, but now perhaps the negative impact in terms of inflation, what is that going to do to consumer purchasing power? And of course, always the FDI story. That's going to be hitting us, I think, certainly fairly soon and into the next year. And I think we're going to start seeing the trade-offs.